Somewhere out there, there is a person who bought Bitcoin in 2013. We do not know who they are. We do not know where they live. What we do know is that they bought Bitcoin when it was worth less than $1,000 a coin. And then they did something almost no one in the history of this asset has managed to do. They sat still. They did not sell at $20,000 in 2017 when everyone on television was calling it the future of money. They did not sell at $3,000 in 2018 when the same people on television were calling it dead. They did not sell at $69,000 in 2021 or at $15,000 in 2022 when the whole industry was falling apart, or at $126,000 last October when Bitcoin hit its all-time high. For 12 full years, through every single thing that has happened in this market, that wallet sat completely untouched. And then this week on May 11th, with the fear and greed index sitting at 28, with retail investors panic selling out of ETFs at the fastest rate in months, with every financial headline screaming uncertainty, that wallet moved 500 Bitcoin for the first time in 12 years. 500 coins that are worth $38.5 million today, purchased for a fraction of that over a decade ago. That person chose this moment. That is what we are going to talk about today. Welcome back to the Bitcoin Report. I'm AI Ryan Matta. And for anyone new here, the way this works is Ryan does the research and writes the script. I deliver it. He put this one together this morning, and I think it is one of the more important ones we have covered in a while, because what is happening right now underneath the surface of this market is almost the exact opposite of what the price action and the headlines are suggesting. So let's get into it properly. The headline version of Bitcoin right now is not great on the surface. The price is sitting around $76, $10 today. It had a rough week, opening near $77,200, briefly touching $78 out of $300, and then selling off hard to a weekly low of $74,500, which is the lowest Bitcoin has been in 2 months. ETFs have been bleeding outflows for 6 straight sessions, shedding over $125 billion in total. There was a 24-hour window where nearly 917 million in futures positions got liquidated. The fear and greed index is at 28, which puts us firmly in fear territory. And Bitcoin's apparent demand, which is a metric that measures whether new supply is being absorbed by the market or sitting unabsorbed, just came in at negative 147,000 BTC, which is the most bearish reading of the entire year. If you were designing a headline to make retail investors sell, this is roughly what it would look like. And retail is selling. That part is accurate. The ETF outflow numbers confirm it. The liquidation data confirms it. The fear index confirms it. Retail investors, the people who got excited about Bitcoin during the news cycle highs, who bought near the top and have been watching the price drift down from $126,000, are exiting their positions right now in real time. That is genuinely happening. But here's the other half of the story, and this is the part that almost none of the mainstream coverage is leading with. While retail has been selling, the wallets holding 1,000 Bitcoin or more, which at today's price means wallets holding a minimum of $77 million worth of Bitcoin each, just hit a yearly high. On May 22nd, the number of entities holding at least 1,000 BTC reached 1,282. That matches the previous yearly peak set on May 3rd. These are not retail investors. These are not people checking the COINBASE app and making emotional decisions based on a red week. These are institutions, funds, and individual holders with enough capital and enough conviction to sit on 8-figure Bitcoin positions and not flinch during a drawdown. And over the past 14 days, those wallets collectively bought 47,000 Bitcoin. At $77,000 per coin, that is $3.6 billion in Bitcoin accumulated quietly, methodically, while the ETF outflow headlines were running and the fear index was printing fear. To put that number in context, Bitcoin miners produce roughly 164,000 new coins per year at the current post-halving rate. In 14 days, whale wallets absorbed 47,000 of them, which works out to roughly 29% of the entire annual new supply. That is not someone nibbling at the market. That is someone who has made a very large, very deliberate decision about what Bitcoin is worth and where it is going. The data firm Alfractal tracks something called the whale versus retail delta, which is essentially a measure of how differently the richest Bitcoin holders are positioned compared to retail. Right now, that divergence has printed its highest positive reading since November 2024. That is the signal. November 2024 is the month that Bitcoin was sitting around $67,000, and the same kind of fear-greed divergence was printing, with retail uncertain and whales loading up, and then Bitcoin went on to run all the way to $126,000 by October 2025. That does not mean the exact same move happens again on the exact same timeline. Markets are not that predictable, but the structural setup, the positioning data, the divergence between what scared money is doing and what experienced money is doing is as close to a direct repeat of that November 2024 signal as we have seen in 18 months. Now let's go back to that 2013 wallet for a minute because I think it deserves more than a passing mention as a data point. This person or this entity bought Bitcoin when it was a niche internet experiment that most people had never heard of. They watched it go from under $1,000 to $20,000 in 2017, which means they sat on gains of more than 20 times their original investment and did not take profits. They watched it crash from $20,000 down to $3,000, losing 85% of its value, and they did not sell. They held through the 2019 and 2020 volatility, through the 2021 run to $69,000, through the collapse to $15,000 in 2022, through the recovery to $126,000 last year, and through the current drawdown back to the mid-70,000s. 12 years of patience, 12 years of watching every kind of market environment this asset can produce. And the moment they chose to move those coins is right now at $77,000 a coin when most people are in fear. The data from Whale Alert gives us one more piece of useful context here. 72% of the moves from wallets that had been dormant for more than 7 years in 2026 resolved as OTC transactions rather than sales on public exchanges, meaning the vast majority of old coins moving are not going to Binance or Coinbase to be dumped on the open market. They are going through OTC desks, which are private off-exchange trading venues where large blocks of Bitcoin change hands without affecting the public price. In 2026 alone, 47 wallets holding Bitcoin for more than 5 years have moved, and the combined volume from that group totals 38,400 BTC. That number is roughly equal to 3 full months of ETF demand being absorbed quietly in the background through mechanisms that do not show up in the ETF flow data that everyone is watching. This is actually one of the more important structural dynamics happening in Bitcoin right now that almost nobody is talking about. The ETF outflow headlines look bearish. What is actually happening is that Bitcoin being redeemed from ETFs is getting picked up on OTC desks and moved to buyers who want no public price impact. The supply and demand picture is considerably more balanced than the surface level ETF data suggests. The mechanism is just invisible to most retail observers. There is one more number from this week that deserves attention, and it is the one that keeps showing up in the price action in a very specific way. Strategy, Michael Saylor's company, holds the largest corporate Bitcoin treasury in the world, and their average cost basis per coin sits at $75,700. This week, when Bitcoin sold off hard during the volatile stretch, it found its weekly low at $74,500. That is $200 below Strategy's average cost basis per coin. The market tested that level and bounced. That is not a coincidence. The institutional world knows exactly where Saylor's floor is, and the expectation is that Strategy, which has consistently added to its position during dips and has the capital structure to continue doing so, represents a natural buyer at or near that level. The bid showed up exactly where it was supposed to. The fact that $74,500 held is meaningful, and the fact that it has now held on multiple tests makes it a progressively harder level to break through on the downside. On top of all of this, there is a monthly close coming in 5 days that has genuine stakes attached to it. Bitcoin is sitting at $76,610 today. Tom Lee, who has been one of the more accurate macro analysts on Bitcoin over the past few years, has been tracking the $76,000 level as a key bull market support line. As of right now, Bitcoin is holding above that line by 610. 5 days left in May. The whale accumulation data is actually the most relevant signal for whether that close holds, because if the people with the largest positions were expecting a breakdown below $76,000, they would not be buying $3.6 billion worth of Bitcoin in the 2 weeks leading up to it. The positioning says they think the floor holds. Let's zoom all the way out because the individual data points only tell part of the story. What is actually happening right now in Bitcoin is the same thing that has happened at every major accumulation phase in this asset's history. The cycle plays out in a fairly consistent pattern. Price runs to a high, retail piles in near the top because that is when the news coverage is most intense and the excitement is highest. Price corrects, sometimes sharply. Retail, which bought near the highs and is now underwater or watching gains evaporate, starts selling into the fear. The fear and greed index drops into the 20s. Headlines focus on the negative price action and the outflows. And during all of that, the wallets with the most Bitcoin, the ones that have been through every previous version of this cycle, start buying at a pace they have not bought at in months. The retail capitulation that is happening right now is a self-limiting process. Apparent demand at negative 147,000 BTC means a lot of Bitcoin has been changing hands from retail into stronger hands. But at some point, the retail sellers run out of Bitcoin to sell. The people still holding at this point have either already decided they are long-term holders or they are the whales who are actively accumulating. Neither of those groups is selling into weakness. When the supply of willing sellers exhausts itself and the demand from whale accumulation continues, the direction the price moves is not complicated. The 2013 wallet moving is a useful lens for thinking about the longer arc of all of this. That person bought Bitcoin at under $1,000. Even at $74,500, the weekly low, they are sitting on gains of 7,350% or more from their entry point. They have survived price drops of 80 and 85% multiple times. They have held through complete market cycles that wiped out most people who were in the asset at the same time they were. The fact that they are choosing to move their coins now in a fear environment through an OTC desk rather than a public exchange is consistent with the behavior of someone who understands this asset at a level that most market participants do not. Whether they are taking partial profits, rebalancing into other positions, or simply moving coins to a new custody arrangement, the OTC routing means they are transacting with a buyer of equal sophistication. Someone on the other side of that trade wanted $38 million worth of Bitcoin at current prices badly enough to go through a private desk to get it. That is the actual market right now, not the ETF outflow headline, not the fear index at 28, not the liquidation numbers from leverage traders who should not have been as levered as they were. The actual market is 1,182 whale wallets holding a combined position worth over $100 billion in Bitcoin, adding to their positions at the fastest pace in 18 months, while every retail indicator is flashing fear. The last time this signal printed at this intensity was November 2024, the month before Bitcoin went from $67,000 to $126,000. If you are finding value in this kind of daily coverage, subscribe to the channel. We do this every day, and we try to give you the layer underneath the headline rather than just the headline itself. And head to bitcoinmaxing.com when you get a chance. The real Ryan built a free Bitcoin retirement calculator over there that is actually worth your time. You put in your current stack and your time horizon, and it shows you what the math looks like across different price scenarios. It is free, it takes a few minutes, and it puts the numbers in a context that is a lot more useful than watching price tickers. Bitcoinmaxing.com. See you tomorrow.